Today, let's talk about something most people ignore when buying property in London: property taxes. When people think about buying a house in London, they usually focus only on the price of the property. But the real cost is much higher because of taxes and ongoing charges. If you are planning to buy property in London, whether you are a local buyer, an investor, or someone coming from abroad, understanding property taxes is extremely important. The most well-known tax when buying property in London is stamp duty land tax, commonly called stamp duty. This tax is paid only once at the time of purchase, but it can be a very large amount. Stamp duty is calculated in bands, which means you don't pay one flat rate on the full price. Different portions of the property price are taxed at different rates. As the property price goes up, the tax increases as well. Because London property prices are high, stamp duty can easily reach tens of thousands of pounds, especially for apartments and houses in popular areas. There is some relief available for first-time buyers. If you are buying your very first home in the UK, you may qualify for lower stamp duty or even no stamp duty up to a certain value. However, since London homes are expensive, many first-time buyers still end up paying some tax, just less than other buyers. If you are buying property as an investment or as a second home, the tax is higher. Buy-to-let properties and second homes are charged an additional surcharge on top of normal stamp duty. This extra cost makes investment purchases in London much more expensive upfront. For overseas buyers, there is another important thing to consider. Non-UK residents pay an additional surcharge when buying property in England. This means overseas buyers often pay the highest amount of stamp duty compared to local buyers. Once you own a property in London, there is also council tax, which is paid every year. Council tax depends on the property's value band and the borough where the property is located. Each London borough sets its own council tax rates. Compared to some other UK cities, London's council tax is sometimes lower, but it is still a regular yearly expense that owners must budget for. If you later sell a property in London and make a profit, you may have to pay capital gains tax. This usually applies to investment properties and second homes. Your main residence is generally exempt, but rental or investment properties are not. Capital gains tax depends on how much profit you make, how long you own the property, and your tax status. Apart from taxes, buyers should also remember additional costs such as legal fees, survey costs, mortgage fees, and service charges, especially for apartments. These costs are not taxes, but they add significantly to the total price of owning property in London. So, what's the final picture? London property taxes can be complex and expensive, especially for investors and overseas buyers. But despite the high taxes, London remains one of the strongest and most stable property markets in the world. The key is simple: never look only at the property price. Always calculate the total cost, including taxes and long-term expenses. If you want more videos explaining UK and European property prices, taxes, and real estate investment, make sure to subscribe. In the next video, we'll compare London property taxes with another major UK city.